Hi, Friday, July 8th, 2016. Monaco 64 here, home of alternative economics and contrarian views. I like to cover the financial markets today. Non-farm payroll came out a lot better than expected at I think around 283,000 jobs created. It was expected to be 175,000. Personally, I don't think this non-farm payroll data reflects the health of the U.S. economy at all, or the labor market for that matter. A few years ago, Ben Bernanke said that when the unemployment rate got down to 6.5%, that he would normalize monetary policy. That's when the unemployment rate was about 8.5% or 9%, and we got down to 6.5% a few years ago already, 2 years or so, and we've been below that. We're now like around 4.9 or 5. I'm not too sure exactly, and we haven't seen any normalization of monetary policy. We saw, a tiny 25 basis points increase in December, and like today people like Goldman Sachs are saying, and John Hilsenrath of the Wall Street Journal, they're saying, the rate hike is back on for the Fed. But they said that after the May minutes of the Federal Reserve, that it was going to be a live meeting in June and that they're going to hike. Did they hike? No. So the other interesting thing today, and is a kind of a headline that I'll make now, and it's you taking a story from the Wall Street Journal and my also part of my story. So U.S. 10-year Treasury yield settles at record low. S&P closes at record high. So to me, who's worked in the markets, especially in the bond market for over 20 years, who traded for clients who were institutional clients, if I told them that 10, 15 years ago, they would have laughed at me. Oh, do you actually mean Treasury yields close at record high yield, and the S&P is at record highs? That's what they would have said, and I said, oh yeah, that's right. This is totally upside down. So we closed at 1.36 on the 10-year yield, which is a lot higher than the German Bund, which is negative, but just doesn't make sense to have a record low 10-year yield while we close at a record high in the stock market, and while the unemployment rate is at 5% and the economy is creating jobs. The economy is fine. So why isn't the Fed hiking rates? But what I'm trying to say is basically that the central banks, they've destroyed, normal economic analysis for the markets, and they control everything, and they control the asset prices, and it's just a rigged game, in my opinion. Below the headline in the Wall Street Journal, there's a quote from a strategist, and he says, there's just so much demand for bonds that it's hard to see a sell-off sustained. Well, the reason there's demand is because the central banks are buying most of them, and they're promising to keep rates low or negative. So it's not investors buying these treasuries, it's central banks and speculators, because when the yield goes down like that, the price goes up. They're not buying for the coupon, the treasury coupon for income. They're buying as speculation, and that's why the price is going up through the roof and the yield's going down. The other point I'd like to make is that I made a video about the yield curve over a month ago, and at the time we were at like quite low levels between the 2-year yield and the 10-year yield. It was at 95 basis points, and it was the narrowest it's been for quite a while. And that in the video I said that indicates a slowdown when the longer term yield is coming down towards the shorter term yield. And today the 2s 10s yield spread closed at 75 basis points. So we dropped a further 20 basis points. The 10-year closed at 136 and the 2-year at 0.61%. So usually when the curve inverts, it's a signal of a recession. The reason it hasn't inverted now is because the Federal Reserve is keeping, yield, the short-term rates artificially low. So that's another indicator that the economy is not doing well, and doesn't make sense to see the S&P at closing all-time high. What else? So now I'll turn on to gold and silver. It was quite a wild ride today. I think, gold was trading just above 1360 before the non-farm number. And then the number came out and gold dropped all the way to 1335. I think silver as well dropped all the way to 1921. So, and at the time I wasn't at home, but I looked on my smartphone, I saw the prices, and I said, well, there must have been a good non-farm number, and it was. And usually in the past, no matter what the non-farm number would be, good or bad for the economy, gold and silver would always get smashed. But today, actually, gold and silver recovered quite strongly, and gold closed at was trading at 1366.45 at 10 p.m. London. That's when the access market stops, and we closed last week on Friday at 1341, so up like $25 on the week. So that's quite encouraging. And as you can see, we closed above that trend line I talked about in the previous video on the weekly chart. That trend line is just above 1340, and that trend line is from the high in 2011. So that looks quite good technically still. The move today on a weekly chart, you can't even see it. So the weekly chart looks positive, and we closed very well today, off the highs of the week, but well up on the week. Silver did really well as well. We closed at 2028 at 10 o'clock London. Last week it was at 1975 at the same time, so 2.64 up on the week. And I still have a medium-term target of 27.37 in silver. As you can see, it's like a Fibonacci retracement of 38.2%. And the other thing I like to note, Cliff High, he tweeted from the Webbot, Cliff High Webbot, Half Past Human. He tweeted today, and he said, yes, the patterns show the reversal day, which has occurred. Which we had a reversal today in silver because it got really hit hard after the non-farm number, and then reversed and finished well up on the day and on the week. And he goes on to say silver $38 may be reached before July 28th. And that's from his last Alta report, the July Alta report. I'm not saying he's going to 38, but according to his analysis, he sees 38 before July 28th. I think silver looks good. Don't know about 38, but I'm just telling you what Cliff High said. What else? Yeah, Bitcoin, has basically been consolidating between 620 and 680 the last couple of weeks. And today at 10 p.m. London was right in the middle of that range, around 660. And I also quote Cliff High. He's saying that Bitcoin is going to 1,000 and then is going to dip back below 897. And and he expects that. I don't know when he expects that. So that's the markets there. So to recap, we've had a record closing high in the S&P 500. We've had a record closing low on the 10-year Treasury yield. We've had further flattening of the yield curve, twos, tens, which indicates a slowdown in the economy. And we've had, new closing highs for the year in gold and silver. That's it. So if you enjoyed this video, please like, share, and subscribe. Take care. Bye.